100% of boom and crash traders want to always win the market, but they don't know how to do this the right way. That's why in this video I'm going to share with you how to always win on the boom and crash market. First of all, let's start with crash 500 index. Going to the market chart right now on crash 500 index. What you first of all take note in this chart is this point where it says on average, one drop occurs in the price series every 500 ticks. So what it's saying right here is that one drops occurs, which is a spike in the market, occurs every 500 ticks. It said on average, which is the average market, how it should be every 500 ticks, right? Every 500 buying ticks, the price will drop on average. That's what it's actually telling us. So but that's not how the market is, right? You can see that there's a lot of spike in this market. When you're trading the crash market, for example, what you should put in your mind is that this market want to always sell all the time. Okay, it doesn't matter if you are in the market for a short period of time and you say that, oh, I wish I have stayed in a long period in this market, I would have made a lot of profit. You don't want to do that, because that is the trick this market use on most traders. Okay, mostly the beginner traders, these are the trick they fall for and end up blowing their account, right? They fall for all these tricks and they end up blowing their account, right? So you don't want to be in that type of situation. You don't want to be among those traders blowing up their account without doing proper checkup and analysis on their account, right? So we can see that there's a lot of spike in this market right now on crash. So the market want to spike all the time. If you zoom out, there's a lot of spike. There is buying power, there's selling power, and the spike are coming down drastically, right? So what you should first of all do in this market is to go to the higher time frame, like the 1 hour time frame, right? You go to the higher time frame right here, on the 1 hour time frame right here. What we're seeing here is that the market has bought. So this is what you want to check first. You want to check how long the market have bought and how long the market have sold. Okay, that is the first step you want to follow. All right, now you see at this point now the market have bought for a long period of time on the 1 hour time frame, and right now the market is selling. This means that if you are a 1 minute trader, you should be expecting a lot of spike on the 1 minute time frame. If you go back to the 1 minute time frame right here, you can see at this point right here there's a lot of spike drop in price movement. As you can see, spikes drop in price movement. So the market have bought. Now is the time for the market to sell. Okay, so these are what you need to watch out for, and this is another key for you to plan your analysis. All right, okay, now this is where technical analysis come into the market. You want to make sure that during this position, if you are trading in the market whereby on the 1 hour time frame the market is selling, this is the time whereby you want to plan the indicator you want to use for your trade. Okay, you need to plan this indicator carefully. Think about the indicator which you are going to use, if it's the MACD or the commodity channel index, if it's the bulls power, if it's the average true range. You want to know the best indicator to use at this time. So what we're going to do right here on the crash 500 index is that we're going back to the 1 hour time frame. Okay, now we're going to look at these charts a little bit, and we are going to figure out the indicator which we are going to use. Okay, now let me ask you guys, what is the best indicator to use during this point in time? Okay, we can see that the market is started by selling right now. So the first indicator which we are going to use is the RXI, which is the relative strength index indicator. So we want to take away these few indicators right here, and we'll start with the relative strength index indicator at this point right now. Setting the highs and the lows. Okay, the highs, which is the level of 90 right here, and the lows, which is the level of 10. All right, we're gonna put a sell at this point on the level of 90, and we'll put a buy at this point right now. So the next indicator which we are going to put on is the MACD indicator. Now the reason why I put it on this MACD indicator is to help us see the price movement, meaning the price action on this current trading analysis. So we'll go over to indicator window 1, and we're going to put on the MACD indicator, right? Just as you can see at this point right here. Don't worry, I'm going to show you guys the parameters later on in the video. Now we're taking a look at the MACD indicator at this point in time. Now whenever price gets to the level of 90, the market will always sell, meaning it will spike. okay, it will drop in price movement. Now we're taking a look at this point right here. We'll zoom in a little bit right here at this point, and we're using the 1 hour time frame. And if you trace it downward from this point downward, you can see that this is level of 10, and when it gets to the level of 10, the market start to sell, just as you can see right here. Okay, now this is the indicator that you can use to see this perfectly, just as you can see. And right here, when you get to this point, okay, at this point you can see it ended at this point and it started following a lowerward in price movement right here, as you can see. And when it gets to the level of 10, which is the oversold level, the market started to buy, going upwards in price movement. If you zoom out a little bit, you can see at this point, it gets to the point, it started to buy. Okay, when it gets to the level of 10, it started to buy, going upwards in price movements, getting to the level of 90, and now it has to drop again because it has gotten at this point, which is the overbought. This is the level of 90, and it will follow this scenario again, going downwards trend, just as you can see at this point. When you go to this level right here, it's retested for a sell, and it got up to this point. Now it's retesting again for a sell. All right, now if you go to the 1 minute time frame, which is the best time for you to trade boom and crash if you want to scalp the market, is the 1 minute time frame. All right, now you're going back to the 1 minute time frame at this point right here. So what you want to do is to check into the market. Remember that I said in the beginning of this video that the market is selling, and on the 1 minute time frame we're going to be expecting a lot of spike, okay, in price movement, meaning the market is going to drop a lot on the crash market. Right now at this point right here, the market just spiked at this point. So as you can see here, there was a drop in price movement at this point. As you can see, there's a spike right here. After one candlestick, there is a spike. Now, how do you place an entry in this type of markets? This is what you need to know on the MACD indicator. On the MACD indicator, during the downtrend of the MACD, there's a lot of spike. Okay, the spike comes in a lot. So this is not the best chance and opportunity for you to place a buy, because if you place a buy, the market will crash and take away all your profits from this market. Right, as you can see, this is a downtrend of the MACD, and if you trace it from this point downwards right here, let's draw this arrow from this point down to this point right here. If you take a look at that, you can see the market started to spike from here. And if you see at this point right here, this is when it gets to the level of 90, and on the MACD, whenever price gets to the level of 90, the market would spike and it will start creating a downward trend from the MACD. Just as you can see, from here down to this point, it starts creating a downward trend. When it spike from here, it starts creating a downward trend. Okay, it starts creating a downward trend. So this is what you need to watch out for. As you get to this point, the market will spike again, and when it starts creating a downward trend to the MACD, there will be multiple spikes. So when you're trading using this indicator, when the MACD is creating a downward trend and when it gets to this point, you don't want to place a buy. So you want to watch out for this point to avoid spikes and you don't end up blowing up your account. Okay, I hope you understand what I've said to you guys, right? And if you want to catch the spikes, you can place a sell so that you'll be expecting a spike in price movement. But remember that the amount of lot size you use will determine the profit and loss on your trading. And remember that whenever you place a sell on the crash market, you are going to be in a losing trade. Okay, you're going to be losing for a while before the spike comes in, and it's a 50% chance. Okay, 50-50. If the spike that comes into the market is lower than the amount you have lost on the market, you're still going to be in a losing trade. Okay, let's say that you place a sell and you take 5 candles away, mean 5 minus 5 candles, taking away your profit, and the spike that come into the market only gave you 3 candle ticks. Okay, let's say the spike that came in only grew upwards to 3 candle ticks. Okay, 3 candle ticks. There's 2 candle ticks left, so that's going to be loss on the trade. Okay, so the best chance is for you to scalp the market taking few candle ticks at advantage in price movement. Okay, so I hope you understand what I've said to you guys. Now this is on crash 500 index. So let's go over to boom 500 index market right here using the same parameters. Okay, using the same parameters, which is the same indicator. So on boom market, remember, like I said, what we're seeing here right now on the boom market, We're seeing that the market have been selling and also it has bought, and right now we're seeing at this point right here that the market is about to sell. Right now, if we go back to the 1 hour time frame, let's take a look at the 1 hour time frame. For example, at this point right here, for the 1 hour time frame here, the market has bought, okay, following an upward trend in price movement at this point towards this direction. All right, and we're also seeing right here that the market have also sold from here up to this point. All right, and now the market is buying right here. Okay, the market is buying at this point, just as you can see here. Now, how do you understand when to place a buy or when to place a sell? All right, now what we should know is that the market is buying at this point in time, and remember that on the crash market we saw that the market have bought for a long period of time and it started to sell, and it gave us a good scope for when to place a buy and when to place a sell. So we're going to follow that the same strategy on the boom 500 index. Now the market has sold for a long period of time, so the next step is for the market to buy. Now I've confirmed this entry. We'll go back to the 1 minute time frame. The 1 minute time frame is showing us that the market would buy, mean that the market would spike. It will spike. All right, the market would spike. So what we should do right here is to try as much as possible to avoid the spike on the market on boom 500 index. Now on boom 500 index on the 1 minute time frame, you can take a look at how long the market has been buying here, and the 1 hour time frame shows that this is the time whereby the market will be buying all the time. And I want you guys to pay attention that on the MACD indicator, all right, on the MACD indicator on boom markets, this is the difference. On boom markets, as the upward trend of the MACD, the spike that's coming to the market is always much. Okay, there's a lot of spike whenever you see an upward trend on the MACD on boom markets. The spike will always come in multiple times, and on the crash market during the downtrend of the MACD, the spike will come into the market much. Okay, there's going to be much spike, many spike during the downward trend of the MACD on the crash market, and on the boom market at the upward trend of the MACD, that's when the spike will come in. That's why you're seeing at this point right here that there's a lot of spike. Take a look. This is when the MACD start going upwards. If you zoom in a little bit right here, you can see that this is the lower part of the MACD. This is when it going, this is the downward trend. Going down here is going up. Okay, now it start creating an upward trend during this point. After it got to the level of 10, it starts going upwards, following an upward trend. And during the upward trend, the spike is a lot. So during this point in time, you do not want to place a sell. Okay, you do not want to place a sell. This is whereby you avoid placing a sell at any means as possible. You don't want to place a sell during this point. You will end up blowing up your account. You will end up in a losing trade. So you want to only place a sell during the downward, when you start creating the downward trend. During the down part at this point right here, this is when you want to place a sell. Now if you take a look at this point right here, the market sold for a long period of time here, from here to this point. Take a look at this, guys. From here it sold very long, and take a look at it from the downward trend of the MACD. There is no spike, barely spike. Is a very little spike, a very little spikes. All right, and take a look at the upward trend from here. Very lot of spike. There's a lot of spike, very much on the market from here to this point right here. A lot of spike. So when you're trading the crash and bull markets, you should watch out for these things. Okay, the MACD indicator and the RSI is one of the best indicators you can use to analyze the markets properly. Okay, and take a look at this point that whenever you're trading crash and bull markets, on the crash market, always put in your mind that the market want to drop in price movement all the time. the market will never be in your favor. Always think about that. That is how you can win in the market all the time. And on the bull market, the market always want to buy. The market always wants to buy, okay? Because this market knows that traders, when they are trading on the crash market, they want to always buy the market. That's how they surprise the traders with a sudden spike in price movement, taking away all their profit they have earned on the market. And on the bull market, they know that traders want to always sell the market. That's why they surprise them with a sudden spike and increase in price movements going upwards. So I hope you understand what I've said to you guys. So if you found value in this video, do it to like and subscribe to this channel, The Daily Forex, for more awesome trading tips and strategies. And also join our Telegram community. The link is going to be on the description box below. I will see you guys on the next video.